Good evening, everyone, and welcome to Swing Trading Channel. This is the market update for January 30th, 2015. Let's look first at market performance. This is weekly, monthly, and year-to-date, of course, because we are in the end of January, the monthly and the year-to-date is going to be the same. But if we look, we're going to find that it's red everywhere, okay, except for the XLV. This is the healthcare sector, okay, and of course utilities as well. And the reason for the healthcare sector and utilities, people consider this as defensive, so they don't tend to sell it when the market is trending sideways, because they pay dividends. But year to date, what's going up is gold, silver, the dollar, and the treasuries, 10% year to date. Just amazing. I don't know, they always say bond market traders are the smartest trader, way smarter than the stock market trader. And they don't see any raise interest rate coming. Also, a lot of people like to, put their money in bonds. They consider it a safe place to put your money and just gain interest, especially the older you get, you don't want to be in the stock market a lot, so they tend to be more and more toward bond. And the only thing that's paying higher interest now that is safe is the US Treasury market. I think the German is like 0.4 or something like this, and the Japanese is like 0.25. So 1.6 or 1.7 for 10 years in the US dollar and the US Treasury, they are considering this a good thing. Anyway, they are proven right, and it's keep going lower, so the interest rate keep going lower, so that's good for them, I think. So this week, the worst performer, I think, was emerging markets and the semiconductor, the SMH, were the worst performers. And surprisingly, the best performer was oil. And all this gain actually came today, just today. I was, watching the market, doing a lot of things today, and I wasn't paying attention to oil. It was up a little bit. And then suddenly I was looking at my cell phone and I'm checking the market, and I found the oil is up like 6%. I'm like, this must be a mistake. And I looked at the news, and I didn't find anything that makes oil move that much today. There was no reason for this big move at all. Still, in the long-term chart, as we're going to see, it's just a blip. It doesn't even register there. But if you know that any reason why the oil moved that much today, please let me know. Gold and silver were a very good performer as well this year. Along with the US dollar, 5% move in just 1 month is huge in the Forex market. Financial did very bad, 7% down, and I think is going to continue keep doing down. And oil also year to date is 10%. So let's jump into the market and see what's going on. We have been talking for a while about this, sideways movement. This is being the lower part of the range, and this is being upper part of the range. And actually, we can, maybe extend it a little bit here and see that every time the bottom hits, it just keeps rallying after till it reach, the top and then goes back. If we just consider this part doesn't exist, okay? So it rallies 1, 2, 3 days, and then comes back down 1, 2, 3 days. Violent moved up and violent moved down in comparison to the past, of course. But today, action and yesterday is, I think it's ominous. We're still in the trading range. Nothing is proven yet that one way or another direction is gaining strength. But this didn't happen before for the past maybe 2 months. So it's always hits the bottom and keep going till the upper range. This time it didn't go, and this could be like, the start of something. This could be, remember, at the day that the market broke down in, and the bears will be cheering. For now, as of this moment, I'm not a bear, I'm not a bull. I'm just saying it's neutral. Just trade the range of the in the SPY, or the stocks are working. Like, there's a lot of stocks that are working. The problem is the timing. Like, if you are not in it now, it's too late to get in. You just have to wait and get in the right time. So yesterday went up because of whatever, Janet Yellen talked up the economy, and today with the GDP. So maybe people thought that she knows something is good in the GDP number, so they bought up the market thinking that the GDP is going to be like last quarter, 5% or something. The news came out today, and the GDP actually was, I think, 2.6, and the estimate was 3%. So it's lower than expected, and the average for the whole year now is 2.4. 2.4. This is what the Federal Reserve is describing as strong. If 2.4 is strong, what is weak then in their mind? I came to the conclusion is that the Federal Reserve is now like, the cheerleaders for a football team. They will never boo the team while they are playing. They always gonna, cheer and give me S, give me C, whatever they say, and they gonna cheer till the end of the game. After they lose, maybe curse them out or something, I don't know. But they are playing the market psychology and trying to talk up the market. I went back and I calculated the GDP for the United States for the whole year, for a couple of years. In 2008, we were 1.68, and in 2008, if you remember, the Federal Reserve did not see anything bad is coming. 2009, when the stuff hit the fan, we were minus 2.02% GDP for the year. 2010, once they start printing the money, it's 3.78. And if you remember, in 2010, they started QE2. They said, oh, no, we need more. In 3.78, they said we need more money to, stabilize the economy. In 2011, it was 3.7, the GDP. And again, they started the Operation Twist or QE2. I don't remember. I lost track of all the numbers. But then in 2012, it was 4.16. So we went from minus 2 in 2009 to 3.78 in 2010 to 3.7 in 2011 to 4.16 in 2012 and 3.7 in 2013. And all this time we were still, the Federal Reserve was saying, no, we're going to keep printing and we're going to keep lowering interest rate, or they're going to keep the interest rate low. Not till 2014, after they saw the data for 1, 2, 3 years, 4 years, 2010, 11, 12, and 13, that the growth is above 3%, and in 2012 was actually 4 something, that they decided that, okay, we're gonna lower, we're gonna cut on the QE, and they eliminated. Now we are 2.4, and they are gonna raise interest rate, or we're saying, we're expecting that they're gonna raise interest rate. So what do you think the market is gonna do? Some people say, oh, what does this have to do with trading? Of course it does have to do with the trading. You need to know in general direction where the market is going for you to be able also to ride the wind, either in the long side or the short side. So the economy is not doing that great GDP wise. I think it's going to continue going. The number is just going to continue moving lower. 2.4 for the year is just miserable. Of course, we look great in comparison to Europe and Japan and South America and everywhere else except China. But who believes the data comes from China anyway? So we have to wait and see. Next week is going to be very important. Watch out 1992, 1980 level. If we broke this support, look down below, we have all the way down to 1825 to go to, which in the short term, it's okay to do. But the problem is people are not going to expect this, and it's going to be a lot of volatility. So just embrace for this volatility. Do not trade this market as we traded 2013 and 14. Nasdaq is not any different. The same story in the Nasdaq. Also this here as our support, and now we are not going. We're expecting to go up. Now we are no man's land now here. This is the oil right here. This is the move today, the 6% move. It's nothing. It's still in the downtrend, and it's still below the 20-day moving average, 50-day moving average, 100-day moving average. I think it's the only average that we are above it is the 1-day moving average, maybe, which is today. So long term, still oil looks looks very weak, and here maybe it's trying to stabilize, and this is going to be a new range for us now between 43 and 50. It would be good. I do not mind actually seeing oil ranging, trading in that range for forever. As I said yesterday, it's good for everybody. Treasuries, I don't know what to say about the treasury. Just keep going up, very nicely. Whoever is owning bond should be very happy right now long term. And it looks like it's coming out volatility squeeze. It's breaking the upper Bollinger Band. It's just crazy. Bonds should not be trading this way, but this is what the market we have. Gold yesterday, we said that this was a very bad action. I was expecting gold to hold this 1280 level. Or 1265, I think it was. It did not hold, and it break through it in a big volume. Now it rebound all the way, but the volume is average, not as strong as we used to see on the big moves for oil. So it's very important to hold the 200-day moving average and stay above it for people to be convinced that gold is in a new bull market. However, as we said, this head and shoulder pattern, or you can even look at it as a from here as a cup and a handle pattern, if you will. And this is the cup, this is the handle, and it's moving higher. It still looks bullish. I like this here as long as it stays here, stabilizes. I don't care if it took like a few weeks for it to stabilize here and then move higher. That would be still bullish, as long as it does not break the 200-day moving average or the 1250 level. Silver, you still have a lot of work to do to compensate for yesterday move. Just broke everything. This level here is very important, and it broke through it like a butter and like a hot knife and butter, and it needs to get back and clear 1850 before you get bullish again on silver. I know a lot of people are not like this because a lot of people love silver. I love silver. I own silver. Owning silver is something, trading silver is something else. This is a long-term thing, this is short-term. I should not be have the feeling that, oh, I want it to go higher, and I look at the chart and say, oh, it's time to buy right now silver. Maybe for the long term, it's you can buy silver every day, I don't care. But for the short term, it is not time to buy silver yet. It's the chart is not just encouraging. GDX, the same thing. Now GDX is right here, and the bad thing about the pennant shape, the longer it stays in it, the more likely it is to break down from it. So it needs to clear this area very quickly. If it did stay here, it's gonna go lower again. So gold need to give it a push, and moves higher. As we said yesterday, the good thing about miners with the low oil price, that this is increases their margin and might make people look look again toward miners before they took took them to the woodshed last year and bottom around $16. The US dollar again in shape. How this is going to be resolved? It might continue go up, but I see the dollar is stabilizing against the euro and is stabilizing against the yen. And those are the two major currencies that the US dollar move against. It's up against every single currency on the universe. But for now, those are the two currencies, and they are stabilizing. And if they continue, dollar might go lower from here. We'll see. Financial still going down. I'm still short financials, and my target area is around 2150, testing this support right here. The 200-day moving average is right there, so it might move up a little bit Monday and then continue down. I just don't see financial moving higher in this environment we have, where the yield curve, not the treasury yield, the yield curve itself, the difference between the 3 month, 6 month, 10 month is flattening, and they don't make enough money in this environment. They borrow money for nothing and trade the treasuries, and as long as the yield keep shrinking, they are not making money. Till this changes, financial are not gonna do good. NWL, we spoke about it yesterday. They reported earning today, and the earning was good. The market took it higher in the morning above the Bollinger Band, and this is what I wanted to see. And I actually got in very small. I went in with call option and very little just to test it. I wanted to catch the move. The problem with call options, you have to be early, like really early. If you're not, and I did get into it with call options, and it just kept moving lower the whole day. So I lost money in this trade, but it's okay. XLF made for it, and this is what happens in trading. Some stocks are gonna do what you expect. Some stocks are not. Just cut your losses short and let your winner run, and you should be okay. Monsanto. We said we need to watch this stock. It's gonna move sooner or later, one way or another, and I'm expecting it to move lower. It's below the 20-day moving average for a while, and my target area is around 1516. So 11 bucks is not that bad. And if we zoom in on Monsanto, you see here the pin and shape, and it's spent a long time in it, and now it broke it down. Today was indecision day. On an okay volume, RSI is moving down, MACD is moving down, the CMF money is coming out from the stock. So I have every single indicator is telling me that this stock wants to move down. I'm not gonna go and short it right here, right now. I have to wait and see. I might take a position if it broke 117, just initiate a position, and then when it clears the support right here, I might add to it and write it down to 105. We'll see how it works. Next week is going to be a very interesting week in the market, and if the market broke the support, we're gonna be down here very quickly. I'm expecting not one shot or straight down, because what I actually would like to see is the market to move down from here, move down, then move up a little bit, and then move down again, and then this is gonna prove that this is a downtrend that's starting, and we'll have a discussion again around 1825. But this is too early to say. Watch Monday and Tuesday are going to be very interesting. I'm going to try to trade very, very lightly, especially in the long side, and be careful. Anyway, that's it for today. Thank you for watching. Have a good evening.